Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
Welcome back, guys, to Real Estate 360 Live. I'm your host, Ryan Sloper, joined by my guest, Louis Cammarosano, the general manager of HomeGain. Quick reminder, the show is designed and dedicated to building the Washington, D.C. Metro's housing and credit markets one house at a time and giving you guys good free advice. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030, or visit us via the web at realestate360live.com. That's realestate360live.com. So it's time for this week's Market Movers. The segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. All you have to do, guys, is go to HomeGain.com today to see what I'm talking about. If you type in your home address, you'll get an instant free estimate of your home's value online. It's a great way to monitor your home's value, and it's totally free. So check that out today, guys, at HomeGain.com. So as we discussed in the last segment, we obviously much of what's going on in the markets is being dominated by the fiscal cliff. This week, the Fed meeting will conclude on Wednesday, which, like we said before, there's expectations that the Fed will announce that it's going to continue to buy U.S. long-dated treasuries. When Operation Twist expires in this month, they're going to probably continue to buy mortgage-backed securities, keeping interest rates low. Don't really see interest rates moving up or down one way or the other without some sort of major thing happening. I just don't see it. Everything's been pretty even keel over the last couple of weeks, and I think it's going to remain that way. We also have the key economic data that's out this week. Won't be out until later with November retail sales, the PPI, which is the Producer Price Index, and the CPI, Consumer Price Index, industrial production, and factory use. Also, the Treasury will auction off $66 billion of notes and bonds starting Tuesday through Thursday, and that's going to be 3-year, 10-year, and 30-year issues that will be sold. It's going to be interesting to see. I mean, most of these Treasuries are going to be bought up by the Fed, I would imagine. No big news there. Like I had mentioned before, President Obama and the Republicans, it looked like they were making some sort of progress, but at this point it looks like that it's stalling back out. The Republican leadership is basically sticking to their guns. Doesn't look as if anything's going to be solved. Louis, would you say that more than likely what's going to end up happening is that they're going to end up just pushing this into next year and extending the Bush tax cuts potentially for a month or two so they can continue to just bicker back and forth?
It's possible, but the one thing is for certain, there will be a lot of bickering back and forth over minor issues, but nothing that's really going to solve the problem. And I remember Obama said, what was it, during the campaign, he was on Letterman or Leno, one of the late-night shows, he actually said that the debt is not a problem short-term. It may be a problem mid-term or long-term, but right now interest rates are low. He can continue to borrow. And his proposal actually puts increases spending. He has another little bit of stimulus in there. So with his attitude, he's not looking to cut anything. He's just looking to make a political statement to raise taxes on the rich. And the Republicans are really looking just to not look bad by, not sticking to the let's not coddle the rich. And so they're not really thinking about deficit reduction either. So nothing's going to happen.
Well, I mean, that's a good point. I mean, I guess it's a great way to look at things. If you're Obama, I mean, yeah, maybe it's not a problem for you right now, but 4 years from now, somebody else is going to be dealing with it, right? Or not dealing with it.
Well, politicians have the shortest time preference. They want to spend as much money as they can and deliver as much as they can while they're in office. They're not trying to build long-term equity or build savings in the economy. It does them no good to leave with a surplus. That means they didn't do their job. They didn't spend enough money. They want to leave having spent and handed out as much money as possible.
Yeah, and, everything would be just wonderful if the economy was thriving. We didn't have the deficit that we had, and we had, mortgage interest rates that were low. But see, that wouldn't be normal market conditions. If the economy was thriving, we'd probably have interest rates that would be higher. And maybe the underwriting guidelines would be probably more loose because there'd be more appetite for it on Wall Street to lend money out to people. But with historically low interest rates and underwriting guidelines that are probably at their toughest levels in years. I mean, I'm not saying, that you can't get a loan. What I'm saying is that if you want the best type of loan, you better have, very high credit scores, 740 and above. You better have 25% to put down. If you choose to go an alternative route like FHA financing or government financing, where it only requires a 3.5% down payment, you can take advantage of those low interest rates with a low down payment, but realize that it seems like every other month HUD is coming out and saying we need to raise our insurance premiums, which is driving or offsetting the low interest rates because you have higher insurance premiums. So instead of it, you may have an interest rate of 3%, but by the time you throw in your insurance premiums and everything else, it's more like having an interest rate of 5%.
And you need somebody like yourself or a mortgage professional, a qualified realtor, to walk you through this process.
Absolutely. 877-245-2030. 877-245-2030 is the phone number. That's an off-air phone number. Otherwise, go to the website at Real Estate 360 Live and enter in your contact information. We'll get you in touch with a professional that can help you out and make sure that they understand your situation. Lay all the cards on the table because, a lot of the time things that screw up transactions, they could be prevented if the professionals that are involved in the transactions know everything that's going on. Part of this business is problem solving at this point, and you need to be able to, be ahead of the game, and don't have any, last minute hiccups. Louis, and I checked this out from, I believe it was NAR and the Wall Street Journal came out at the end of last month, which was just basically they were giving the percentage increase in sales of homes over $1 million, basically luxury housing market. And they were showing that they've been increasing throughout the country, which I would tend to think that would probably be the case. I would see that maybe that the prices are coming down in certain areas, but other people that are trying to buy these luxury homes, if they're able to obtain a home loan, it's a smart time to do that right now because you're able to, lock up that big debt at a low interest rate. So in the South, basically they had an increase of about 25.1%. This is year-over-year increases. Wow. In the West, 63.7%, in the Midwest, 15%, and in the Northeast, 27.6%. So overall, if you took it all the way across all the major metro areas, the percentages, and this is with a loan that was taken out, over $1 million was 28% increase in the homes in the luxury market that were sold. That actually people that obtained a loan. Under $1 million was only an increase of 8.5%.
What does that tell you?
It tells you that really just the ultra rich are able to take advantage of things.
These policies, these low interest policies, which are supposedly designed to help employment, which they're not, are just helping the rich be able to finance bigger and bigger homes.
Absolutely, yeah.
And that's where the attention needs to be, not on how much they're taxed, but how these policies are just a gift because they don't have any trouble getting. They have the credit rating, they have access to capital, and they're getting more of it for free, basically, to buy more assets.
Absolutely. I mean, they're in a position where they could put cash down and buy it outright if they wanted to, or they can.
Why do that?
Why do that when they can leverage somebody else's money at, even in the jumbo market, let's just say it was in the mid-4s somewhere or 5%, who cares? You know what I mean? They're still borrowing it, very inexpensively. And I think I believe it was Barbara Corcoran, who's basically one of the real estate moguls up in New York City, also on the show The Shark Tank. Have you ever seen that show, Louis?
Yeah.
Okay, so she's on there, and she came out and said that for move-up buyers that you should do it now. She feels that if you're upgrading to a bigger house, even if you're selling at a 10% discount, you're going to buy your new house at 10% off. And she says that price appreciation is going to be much higher than people anticipate. I find that, interesting because I think in the major metropolitan areas we are seeing major price appreciation right now, and it has to do with interest rates, people that can take advantage of them, and it has to do with the undersupply of homes that are on the market in these major metropolitan areas.
And it also has to do with investors, Ryan, jumping in, realizing because they have that access to either cash or credit, they can buy the homes, and because the normal person, the average person, doesn't have that access, they have to rent, so they figure this is a perfect way of meeting that demand by going out and snapping up these homes.
Yeah, and you bring up a good point about the whole investor thing, and that's something I wanted to touch on today. So a lot of people have said they were getting very frustrated with being beat out by countless investors on these properties because they're offering cash, and the seller just opts to go with the cash contract versus, one where somebody's trying to obtain a home loan. I've done a lot of research, and what's happening, and I don't know if this is a move, but I can kind of see where the banks and the Federal Reserve and everybody else would want us to be a nation of renters at this point, because it's not very advantageous for them to continue to lend money at these levels. Well, one of the largest trades that's getting ready to take place is I believe, a portfolio of like 25 or 2,600 homes that Fannie Mae has that's going to be bought up by a real estate investment trust. Now, these real estate investment trusts, hedge funds, and these huge conglomerate funds, I believe right now there's about $8 billion sitting on the sidelines, ready to start buying up every home that they can possibly take, and their sole intention is not to flip these homes. It's to turn around and rent them out. As you and I have suggested, Lewis, over time we're going to see rents rising, and they're looking for rate of return. And where can you get those rate of returns? On buying real estate.
4% interest rate, and then the rent appreciates 10%. There you go. Every year you've got a nice gain.
So what does this really mean? Especially, and most of these funds are going to be buying major metropolitan areas. They've got cash to spend. Cash is king. So think about this. All this money has been, they've basically been raising this money over a period of time, and now they're ready to chomp at the bit to take advantage of where the market is right now. It's going to get more and more difficult for the average Joe investor to buy, and for people that are looking to buy a home for the first time, it's going to be increasingly more difficult because they're coming up against, billions of dollars out there. Yeah. So, if you're thinking about buying, you might want to really put some emphasis on doing it sometime soon, just because there's going to be more of an increased competition coming in the coming months. So, just some food for thought there. We're coming up on a break. I want to let you know while there could be harmful effects from changing the listing price of your home. Stay right there when we come back.